This is the All-Star Charts podcast with JC Peretz. Hey guys, today's podcast has a particular focus on Canada, but not just for Canadian investors. This conversation is for investors all over the world. Wait till you hear this. JC sits down with David Cox, financial advisor at CIBC and fellow chartered market technician. David and JC have known each other for years, so this was really fun. The boys discussed U.S. and Canadian stocks, interest rates, the dollar, gold, of course, Bitcoin, and all things technical analysis and risk management. This was a good one. Hope you enjoy.
I am here joined by my old friend, David Cox. And by old, I mean we've known each other for a long time, not so much age-wise, right?
Yeah, sure.
We'll go with that. David and I, we know each other because you come to New York for all the CMT events every year. So we always end up running into each other near an open bar somewhere.
Indeed.
And we catch up, and then, we share emails and stuff like that all the time. And at the bottom of your email, you have every letter in the alphabet.
I used to be busy when I was young.
You must really enjoy taking tests.
Come on, I'm older than you. I mean, that's a long time ago now. So
even though you have all these letters, just to name a few: CMT, CFA, FCSI, FMA, BMath. I don't even know what that is. So I don't know what half of these things are. What I do know is that you're always asking about charts. You're always talking about trends. You're always talking about technical analysis. I don't know what half these things are. Like, talk to me. What's going on here, man?
Well, charts is where it's at. I mean, a long time ago, I realized in this industry, you need to have I used to work institutionally. You needed a CFA designation. It was the standard kind of path. And then, I got into the retail side of things. I guess it's 18 years ago now, and quickly realized that fundamentals just don't matter. I mean, you can lose a boatload, and I needed to read charts, and I started learning charts, and that is where I hang my hat. We use charts, as you know, and they're very useful, and they allow us to skip narratives and just kind of go and follow the flow and follow the money. It works.
So what do you mean institutionally? Like, you started off institution and then went to retail. What does that mean? Explain to the audience.
Yeah, I used to work in quantitative research for a pension fund manager, one of the private pension fund managers. And, they saw my math degree and whatnot, and kind of got going on that route, and used to do a lot of quantitative modeling and all kinds of optimizations and linear optimizations. And it was pretty wild, pretty great job. But again, we my wife and I ended up deciding we wanted to live outside of the big city. And so we moved to retail and just changed it up and started having clients and have gone from there. So that was kind of a long time ago, to be honest.
So it's a financial advisor now, right? That's your role.
Yeah. Official title is portfolio manager and investment advisor. Yep.
At CIBC.
At CIBC. Yep. One of the big banks.
Yep. So Canada, your whole life?
I've been in Canada the whole life. I've certainly traveled in the U.S., but I'm Canadian from Canada, about an hour from here. And I've always been here.
I've had nothing but amazing times in Canada, David. Visiting Toronto, catching a Jays game, getting some Thai food afterwards, sushi. Toronto's such an amazing city. It reminds me of like Midtown Manhattan, but cleaner and nicer people. You know?
Okay, fair enough.
And I say that with good experience. Visiting the West Coast, Vancouver, Whistler. I mean, the whole thing. The drive from Vancouver to Whistler is ridiculous.
Beautiful.
Oh,
yep.
I got to make my way to Banff. That's next on my to-do list. I'm sure
Yep.
there's a lot in between and everything like that. But and every time I say things like that, I get emails from all sorts of Canadians. JC, you're just skipping half the country. There's so take no offense to it. And by all means, send over the recommendations. I'm now back on the East Coast after 5 years in California. So I'm a hop, skip, and a jump from Toronto, swing by BNN, say what's up, right?
Yep.
So what are you Canadians doing now? Everyone's doing backflips. Bank stocks are finally working. Natural resources. Like, this is like Canada's, right?
So I'm surprised, there's not too many, Americans that I even consider to be aware of what goes on here in Canada, So we've sat here largely and significantly underweighted, as if probably zero weighted for the most part for 10 years, because frankly, the market's been underperforming, right? I mean, it had a great rally into the relative outperformance into the '08 there after the market peaked in '07 and most places in the world. And but there's a lot to offer if you're interested in the commodity theme, if you're interested in the value theme, if you're if interest rates are going up. So if you're buying all the things that are kind of happening right now, I think you've got to look at Canada. And certainly from an American perspective, currency is important, and Canadian dollar is on the rise.
Yeah,
so it's a tailwind. It's a tailwind for you, right?
And what's really interesting is that in the first quarter, the U.S. dollar index rallied. And when you look at the components of the U.S. dollar index and look at euro and yen got absolutely smoked, right? You look at all the British pounds. The Canadian dollar was the one that held up the best.
Yeah.
Right?
No,
There's
absolutely.
something going on there. Is it a coincidence with the natural resource and value exposure? Or is all of that happening simultaneously for good reason?
Yeah, I mean, from my perspective, it's simultaneous. I mean, the very fact that we've seen this kick in of higher rates and financial outperformance and the commodity theme and copper and steel and mining in general, and it's just this precious metal side of things that's been weaker than weak. But I mean, other than that, I mean, there's a lot of themes in the Canadian market. I think one of the things that probably isn't even well understood is there's a lot of industrial exposure. We've got a lot of economically sensitive industrial names on the stock market, and industrials, as you know, are doing really well south of the border, and I'm telling you, they're doing really well north of the border.
I think you guys have, I don't have the weightings at the top of my head. Actually, I'm looking at them right now. Financial services represent 36% as opposed to somewhere in the neighborhood of 15% for the United States. The industrials represent 10% of Canada, while industrials only represent 8 to 9% in the United States. Certainly a lot more energy, certainly a lot more natural resources in general. Let's talk about home country bias that has served Americans so well. Having irresponsible, theoretically, that's why, in theory, practice and theory are the same, except in practice. So in theory, it would have been irresponsible to be obnoxiously overweight tech and U.S. stocks over the last decade. But that actually turned out to be fantastic and rewarded that irresponsible behavior. Meanwhile, home country bias in other areas, Canada in particular, but other emerging markets and, Australia and other places as well, they were penalized for that home country bias. Sounds to me like Americans maybe need to learn something from maybe some of the mistakes of their northern neighbors.
Well, I think we all have a lot to learn, right? And I think we all have domestic bias. We all have home country bias, and Canadians too. I mean, for years, I've been running presentations and seminars, and if you ask for a raise of hands, everyone's got a 90% plus Canadian portfolio, and they've missed the U.S. rally, which has been taking place for 10 years plus. So again, the market's got a very different composition, and I think especially like literally right now as we sit here, I mean, you still have to squint. If you look at the 30-year chart of the two relatives, you still have to squint to see what's going on that right side at the bottom there, as I look at it. But the bottom line is there's something that this country offers in terms of stock market that the U.S. doesn't really. You look at those weightings, JC, that you already rhymed off. I mean, back in 2008, energy was 30% of our market. Materials was 20%. So it was 50% resource. And obviously, market underperformance has driven part of those weightings that way. But I think it's a very important time from a foreign standpoint to be looking at Canada. So just to kind of make sure, I kind of make myself clear, if I'm an American right now, which I'm not, you've got a currency tailwind, which actually helps you. It doesn't help me as a Canadian investor, but at the same time, the exposure, there are exposures that you can't get, I don't think, as cleanly in the US. Now, there's interlisted stocks. Sure, we have some of the same names on the big side. And some of the people probably buying investments in the U.S. market, some of these ETFs, they probably don't even realize there's a lot of Canadian names in some of these mining ETFs, which makes sense. But I think we're from an American perspective, I think it's very important. I think 2021 could be the moment when you better start paying attention to what goes elsewhere, because the reality is it's been a great run in the U.S.
So you as a financial advisor, like you're talking about how a lot of people missed the boat in America. How are you able to position your clients to take advantage of that as a Canadian FA?
Yeah, so we used to have limits. Like 15 years ago, used to be limited, and a Canadian retirement account used to be limited to 30% foreign content, and they threw it away probably around 2005. And so since then, especially since you've had the last 10, 11 years, with material outperformance of the U.S. stock market versus Toronto, our clients here have sat pretty much foreign. I've owned a 100% U.S. equity portfolio for a long time because I don't have a bias. I just want to go where the relative strength is, and it has not been in Canada. But in the last few months, there's a couple little Canadian things starting to creep in here. And again, it's no coincidence we're having this conversation because you're seeing what I'm seeing. And the reality is, I think the game is changing. And I don't have a bias. I just want to go where the relative strength is, and I'm open to anything. But we have sat predominantly, absolutely underweighted, zero-weighted Canada for a long time, rightly so. Whereas most Canadians, of course, have sat and just pushed into the wind, missing essentially this huge equity rally in the U.S.
The biggest changes in the exposure, Canada has I think a third of the technology exposure, maybe even less. No, about less than half of the technology exposure to the United States, 4 or 5 times the energy exposure, materials, more industrials, more than twice the bank exposure. Those have been the worst places in the world, right? Because this is a global market. It just so happens that the way Canada's economy and stock market is built around are what has been some of the worst investments on planet Earth over the last decade, and where they're smaller in have been the best places. But as we've seen that shift, this whole rotation into value, what I've noticed, David, is that it's not just a U.S. thing. Where the U.S. is obviously what everybody's talking about. The mega caps got killed, and you're seeing value taking over, and the Russell and all that stuff. But it's international. Singapore breaking out. Half that stock market is financials, right? Your Canada is. We've been saying it for months. Canada is just like Exhibit A, like hello, all those value sectors, rotation, and the stock market and the currency market are acting accordingly.
Yeah, absolutely. I mean, let's just talk about banks, because our banking system is very different from the U.S. system. I mean, we don't have this regional. We don't have public companies that are small. We just don't have that. But I just took a look this morning. The dividend yield on our stocks, from a financial perspective, it's way higher than yours are. And that's, again, no surprise. Your valuations in the U.S. have been stretched everywhere. And the financial sector, I just don't think provides the same kind of backing as we do. We're sitting 3.6% on average today on the Canadian banks. And I'm talking the big 6. And that's a decent dividend yield. And these are big companies. So it's not like some fly-by-night Kansas regional bank, which, again, great. Regional banks have been happening. Don't get me wrong. But again, I think there's a different level of comfort that also comes with a large cap. Again, we've got 6 big banks, right? And they're big. And so the dividends are rich. The currency behind you. I think there's a lot of things here that are being overlooked by most Canadians. And I think, you look at the Canadian ETF, right? Like, to me, your ETF that trades in New York, which is not how I look at Canada versus the US, but with a baked in currency, that's what you got to look at. And again, you're starting to see that outperformance. You are seeing it. Even post US election in November, you're seeing it. In fact, it's on my screen right now. You're looking at the difference between the Canadian ETF up 24% since early November and the S&P up 15%. No, that's 9% of outperformance. Significant. And it's like still a squint on the right side of the chart.
Yeah, it really boils down to identifying whether this is just the beginning or is it a blip within a longer term trend that we've been in. And I continue to lean towards this is just the beginning.
Yeah, I'm going to lean that way, but I'm open to all things. So again, if this doesn't start, I mean, you're going to remember that in 2016, it looked like we were going to have this start again. The commodity thing kind of fired up, didn't last very long. Disappointing, when you really look at it, but at the same time, this does look more legitimate to me than even in 16. And so to me, the theme is sitting there. You've already pointed out, you've got the Canadian dollar is sort of doing its own thing. It's not even doing what you'd expect as a US dollar is strong. You got copper just kind of, blowing any forecast away. These are all very positive things. So I do want to mention something that, again, you didn't get brought up yet, but liquidity. So, one of the problems I have with the Toronto stock market is it's not the most liquid vehicle, like the most liquid exchange. So give you an example. I ran the data just because, I wanted to have this conversation. If you look at the mid caps, I looked at the US mid caps on average right now, they run about $61 million in dollar volume a day. Our mid caps in our completion index, about 15 million. So about 1/4 the volume. So from my perspective, that is a negative, right? And to me, that's a negative anyone has to experience. So if you go and try to buy a block of shares in the mid-cap environment in a volatile little commodity space, be aware that, you might own that block, and it's a little bit more expensive to get in and out, I believe. Okay.
Oh, that makes a lot of sense. And for some investors, for a lot of investors that don't have liquidity issues and can be nimble, that's one thing. But, for institutions and financial advisors that are buying blocks to then split it amongst accounts, it becomes more difficult, just to be clear, right? Smaller investors or individual investors don't have that issue.
Yeah, absolutely. And not to mention, the interlisted stocks, which are really the big ones, a lot of the dividend payers trade in New York. And again, I'm always almost embarrassed for Canada, because the reality is the volume in New York is much more significant than Canada. Yeah. And I'm constantly saying, wow, I don't even know why the Toronto stock market is open rather on a US holiday, because we just have no volume on our own,
Yeah, when I talk to European investors, particularly in the options market, they're like, yeah, there's just no liquidity out here. We need to buy US options. Well, okay, so we talked about the banks, we talk about commodities. It's not a coincidence that in that environment, interest rates are going up, right? So I don't know if it's the tail wagging the dog that financials are up because interest rates are up, and interest rates are up because commodities are up, or if it's commodities, I don't know all I know is that they're all doing it at the same time.
Right. Which to me, that adds to the belief here that it's happening. If it was just the lone wolf thing where something's going to the moon without everything else, I'd be more suspect. So that's why I'm saying, when I look at all the ingredients that we had in 2016, and I was like, oh, wow, are we going to get a commodity rally? This does look very different. I really like what's going on in rates. And, you look at copper soaring through $4. These are important things. And so again, I believe that, just like you're saying, that we're definitely leaning toward this is something that is going to develop. It's not something that is already missed, right? It's not something that has just happened. I think the breakouts that we've just had in the Toronto stock market is much more recent than the US. And again, our market's really gone nowhere, again, just till recently. In May of 2020, after the COVID crash, we basically were below the point we were at in 2008, 12 years flat. So we have just recently broken out. And again, what's it full of? We've already talked about it. It's full of that theme. So the resource theme, the financial theme, the industrial theme, it's just more full than the US market.
So with money coming out of bonds and it's going into energy, commodities, base metals, this just doesn't strike me as the end of a cycle. And the one thing we do know about commodity cycles is that when they go, they really, really go. So if this is going to be a real commodity super cycle, and I'm not going to put words in your mouth, but I believe that we're in the early innings of one. Are we talking about $8 to $10 copper, $200 oil? Is that the conversation that we need to have?
Well, I think the chart suggests we have to be open to that idea. Again, it might have looked different a couple of years ago, but now we absolutely have to be open to the idea. To me, you look at the CRB index. It's gone nowhere for eons, right? And I believe that something very weird happened last year, and maybe it was that inflection point with oil going negative. Who knows?
What a classic bottom. Classic.
I'm right with you. The bottom line is, to me, when I look at the charts, it looks potentially very early. So this is not something that just happened in the last 2 months or, has been missed. This is something that I think institutionally is massive underweighted. You just look at institutional global data. They're not sitting here in the materials and energy space, right? It's very early. And that's because they were probably really there, 10, 12 years ago, and then got absolutely beat up. They probably just sold a year or two, right, ago. And so, again, I believe that from a flow standpoint, and you can imagine when that sort of, we go from underweighted sort of globally in a sector like materials or energy to starting to go up to even equal weight, not to mention overweights. That's money flowing. And so we shouldn't be surprised as investors to see some of the moves we've seen, because that is just basically the spigot's been turned on. And who knows what happens, right?
And I don't want to be like Mr. Dramatic guy, like, oh my God, JC thinks oil's going to 200 and copper. I have no idea what's going to happen. They can all go to zero. I literally have no idea what's going to happen. But I like David said, I think we have to be open-minded to that possibility, right? We can't just eliminate because I'll get people, I'll say things like that. And I'll get emails like, oh my God, that's never going to happen. Okay, maybe it never happens. But I'll tell you this much, where we're sitting right now, and I've been saying it for months, I'd be more surprised if it didn't happen than if it did. How about that?
Yeah. Again, JC, I hear you. It's the charts are all lining up, right? You've already spoken to that a couple times. You've got all these ingredients of this kind of trade, the value trade, if you will, all sitting there, and they're all kind of sitting there in a coordinated way. I mean, there's a couple missing ingredients. Let's talk about, the emerging markets. A bit of a relative underperformer here. Like they tried to get going again in the fall, and what's happened? A little bit of a rollover again.
Maybe they have too much tech exposure now. It's not. It's not the emerging markets of it's not your dad's emerging markets.
I like it. And I like that. I like the thinking. And I think that is actually potentially bang on, which is pretty exciting because I remember the emerging markets, 04, 05, 06, like they were going and that was big, but maybe they're different. Maybe the indexes have put different stuff in there and, shame on them. But what do you do, right?
But that's because classic index provider behavior.
Absolutely.
I mean, right?
Absolutely.
Sure. Lack of rebalancing and all that. I mean, right? Just beautiful. Maybe
the Dow buying tech and selling energy in the fall is it?
Kidding me? Exxon started rallying as soon as they kicked it out of the Dow. They brought in more tech. I mean, come on, can't make this
classic.
Up. Classic. Yeah. Okay, now let's talk about the. I mean, we're in Canada here. The big elephant in the room, the one there that ain't working. Oh my God, gold can't. Dude, nobody wants this thing. Nobody wants it.
No, that's true. But again, I just tweeted this chart out today. If you take a look at it right now, this consolidation, even in the last 8 weeks, you're sitting here right above those 2020 highs, right? That were resistance before. I'm not making a case for it. I mean, you can chart it as well as I can. Gold has been underperforming stocks. It's making multi-year, multi-decade lows, like whatever. I mean, from a relative strength standpoint, not really interested. But like when I'm looking at the top, the March 20 levels there, where we got into that 1600-ish kind of thing and faded, right? In the whole madness of the COVID crash. I mean, the bottom line is we broke out of that later that year. But now we've come all the way back down. This thing's been in a pretty painful downtrend since the highs, right? Since the summer, basically. And the stocks themselves, I believe, are continuing to underperform the metal even. That's not what you want to see if you're trying to make a case for them.
Silver was, one of the bullish cases for gold was silver outperforming, and then that came to an end, right? Because when silver's outperforming gold, the way I see it, how bad could it be for precious metals? That's sort of my lazy thought process, but that has served me well. And that was one of the things that I was pointing to. So, and I mean, it's lost that luster over the last few months. So that's got to come back. And then maybe that was it. Maybe we do come back now. Silver starts to outperform and fine. But I think that's a necessary ingredient.
Yeah, absolutely. But to me, what I probably like most often, and it's kind of like a little bit of a sneaky smile. You look at these precious metals and you look at all these people calling for the end of the world. And it's like, hang on, guys. I mean, this stuff should be working for you if the world's about to end here, and the world doesn't look like it's about to end. So I like the fact there's no bid in gold. It doesn't matter to me. I'm wide open. But again, it's a volatile space. So I mean, I always find it very useful. You want to plot the stocks versus the underlying. Always see what's going on. And again, I think you can see that, gold versus gold stocks is not the same as what's been going on in recent energy performance or for that matter, copper, performance.
One thing that I always find really interesting, when I have conversations about stocks and just investing in general with Canadians, there's certain topics that just come up. Gold is obviously one of them, natural resources, of course. Few others, marijuana stocks. There's a lot more liquidity and a lot more exposure there in the Canadian space. I'm getting more and more phone calls about the psychedelic space as well. How Canada's got some stuff in there that the United States does not. Like early movers.
No, I mean, I'll speak to that because we've got this thing called it's not even called that anymore, but the Vancouver Stock Exchange, right? The Vancouver Stock Exchange was always like the speculative kind of, highly promoted, almost micro cap kind of, you can't afford a listing in Toronto. You go on the Vancouver Exchange. The Vancouver Exchange all last year massively outperformed Toronto market, which is very interesting. So from my looking at that in the past, that is a very confirmation that we've got something going on in Toronto. When you've got the venture exchange outperforming, and you've got some of these themes we're talking about, to me, they're suggesting something's going on here. Because what are people doing buying the most speculative stuff if there's nothing to it. So recently, I will notice that in the last few months, the ventures cooled off for some reason. It's a bit odd. I don't quite understand it because it's again, the composition does change. You mentioned there's been some health entrants and whatnot, and so again, the composition changes. I don't really follow it, but I do like to look at Vancouver divided by Toronto, and it has rolled over recently, and I don't know why, but it is one thing that sits out there in my mind. If we're going to go and expect a further robust, kind of rally on the resource side, I think you're going to see that pick right back up. It should. Almost the same as you'd think from a U.S. standpoint, we see microcaps outperforming. It's kind of the same idea when you see the speculative theme alive and well.
It's really interesting. It's a theme that we've seen globally when you look at, some of the some of the lower quality countries in Europe, when you get outside of the Germanys and France, and you're looking at the Portugals and Italy breaking out of a 12-year base, and Spain, and you're seeing strength in certain areas. When you look at frontier markets, again, places like the Bank of Kazakhstan and Kuwait, and Jordan and Nigeria, like these aren't exactly places where money goes to hide in times of where they're trying to get defensive. Like these are the most speculative places in the world.
Yeah, no, absolutely. I think in one way, the arguments for those trying to be negative, they're kind of running out, right? Recently, right? And that's not to say that things can't change. Right? I think you and I both know that things could change tomorrow. Absolutely. And I'm wide open to it. But again, what you're seeing is not such that, we're sitting here in the front of some massive global top. And so again, I believe that almost further adds to the idea here that what's going on in the reflation world and commodities firming up here is looking like, wow, is this like a resurgence of 2 decades ago, which is really the last time this stuff got going? Maybe, right?
Let's talk practicality, right? So let's think of, let's say we came into today 100% in cash, right? Forget where your cost basis is, all that stuff. Forget everything you ever thought. Here we're coming in, everything's fresh. What does that allocation look like?
Yeah, so that's a great question. So, I mean, it's almost easier for me to use legitimate, like, where's my allocations? But again, I want to be careful because I do think it's very different if I was an American, right? So if I was an American, there's opportunity right now that there isn't for me as a Canadian, because the problem I've got as a Canadian investor is this strong Canadian dollar eats away at my U.S. equity exposure. I'm losing money as the currency rallies. So that's why it starts to almost force you back, domestically. But at the same time, I think if I was an American and I was sitting here, I think that if you've been sitting, 100%, US, which good for you, that's done really well. I think we're in the environment where let's open the box here and let's not even get into the valuation argument, which I know the valuation guys will scream. There's way better opportunity outside of US. But I think you've got to be in the environment where if I was an American, I'd be starting to imagine, wow, I'm starting to be interested in lots of things. Asia's happening. Canada's happening. The resources is happening. We've got so many things happening. I don't see why you'd be biased at all, US, and I don't see why you'd be pushing allocations over half. Like, why not? That's where the relative strength is starting to show up. And until that reverses, until that, kind of that Canadian ETF, for example, versus SPY starts to massively roll over, awesome. Push the theme because it's there and it seems to be working and it seems to be coordinated. So I think we got to be more open. So again, I don't think I can quite answer the question the same as I wish I could, because I'm not an American. I'm not an American investor. But I think an American investor is at a very interesting time right now because that currency is a tailwind. And I can't tell you how many times you go in a place like Twitter and they're like, oh, currency risk. What's a currency risk? I mean, the chart's in an uptrend. Just follow the trend and don't be afraid. If you look at the Canadian dollar is basically sitting right now, is basically sitting where it was 16 years ago. Like it hasn't gone anywhere, big picture. So it is a tailwind, though, if it's rising, which it is rising in the last year, right? And if commodities are going to go higher, I think the Canadian dollar is going to go push higher, and you're going to see 82, 83 cents kind of make happen. And next thing you know, who knows what happens? I remember when we were more expensive than your currency, November 07, right? I'm not saying that's going to happen at all, but again, that's benefit to the American investor willing to allocate outside of home country.
Let's remember what you're getting. You're getting materials, you're getting energy, you're getting financials, you're getting industrials. You're getting a fraction of the tech, right? Like a much smaller fraction of the tech, because in America, when you look at the tech sector, and then you add Amazon and Facebook and Google and Netflix, which none of those are tech stocks, you add all that, now you're pushing half, right? Yeah. You're all tech. So, Canada gives you that added exposure to those areas. All right, fine, Mr. Smarty Pants. What's it going to take for you to be wrong, right? Where does that thesis totally blow up in your face?
Well, it's all these relative charts that we're talking about, right? So it's that value growth chart has to roll over. Interest rates have to sort of want to come back down. Copper's got to fully bust down. So all of these things would have to happen, and they'd have to all kind of happen in a coordinated way for me to walk away. Because even if you look at the last year, for example, commodities versus the S&P, it's been commodities have been outperforming. I know it's coming off a little bit here in the last couple of weeks, but the reality is the theme is there. So all these relatives would have to, again, re-roll over and sort of walk away, to call it another false attempt. But because there are so many ingredients, I just don't think that's going to happen, but I'm open to it, right? You have to be open to it. And you'd have to go and draw a line in the sand, which I would do with any investment anyway.
You and I, it's almost like we were trained the same way, David. I hate the fact that I agree with every word that comes out of your mouth. I wish I could push back on some of the stuff, but you're just like, I don't know, you're talking my book. What do you want me to say? Everything you're saying, I agree wholeheartly. When Straza listens to this, he's going to be cracking up. He's like, "It's David in our meetings. Is he taking?" All right. Talk to me about the laser eyes. So I caught you with some laser eyes. What do you-
as I said to you before, what do you do? This crypto space, I don't know. Am I some crazy crypto person? No, not at all. But I know how to spot an uptrend, and I see uptrends, and I don't know what else to do but to look and to be interested, right? What are you supposed to do? It's an uptrend. Am I warming up to the idea that we've got the idea of the potential for a new asset class here? I'd like the idea. And the reason what's really kind of cemented at home is seeing a couple of S&P companies kind of stand in here and kind of move a couple dollars. That's interesting. I think that's very interesting. And I think it adds a lot of weight compared to where we were 3, 4, 5, 6 years ago, right? And I think that alone is, I'm curious. I'm interested. And the bottom line is, look at the chart, right? We can both read it, and it clearly seems to be going higher. Am I on side with the sort of, I'm sure there's a whole crowd of people that are, crypto crazies, right? Just like there is gold bugs. I'm not willing to camp or plant the flag, but at the same time, let's be honest. I mean, there's relative strength, there's absolute strength. Let's find it. Let's go there and let's invest.
And is this something that you are investing in for yourself in your own PA, or are you able to help clients participate?
We are definitely able to participate from a client perspective. It was difficult because all we had was essentially we can't in Canada you can't invest in pink sheet US pink sheet stuff. So the standard ETF, as we couldn't buy that. It doesn't apply. It's ineligible. So when suddenly you're starting to see kind of ETFs that are coming in that are not the same as they were before, where you're dealing with closed-end funds, where suddenly you look and it's the premium is 110%. I got my rational hat on here. I'm not buying into an uptrend if I'm paying 150% plus. Right. So now that's starting to kind of, in the last recent months, we've got a few vehicles that are starting to show up that are arguably priced properly. And so if it's priced properly, now we can get into looking at the underlying, and I like that. So absolutely, we do have some exposure in multiple portfolios. And again, I'm always willing to invest where there's opportunity, as long as we can manage the risk and as long as we can follow it, and we can.
All right. So what is the risk? I'm with you. I like Bitcoin. I'm in. I own some. Where are we wrong? Where are JC and David where does it blow up in our face?
Yeah. So again, this is where we get into what kind of time frame do we have, right? Because we all have different time frames. And again, I can operate on a short time horizon. And to be honest, most of what I do, I'm willing to go and change my mind with a short time, and re-enter. I'm okay with that. I am not going to stand around and watch some massive sell-off happen. So, looking at the daily chart right now, you're talking, you got a low at 52,000. So, call me cheap, call that too tight. I don't care. That's my current line in the sand, right? So I don't have a problem rebuying this stuff, but this is a very volatile asset, right? One of the things I'm still trying to wrap my head around is it's 24/7. I'm not used to looking for a little price quote at the on the weekend because there's a price quote. That's weird. Yeah. And so there's my line in the short term. Again, I think arguably 46,000 there would be too low as a go. That would be more legitimate.
That's been mine. 45.
Yeah, fair enough. Fair enough. So, like, again, buying dips in an uptrend, I'm on side with that. And so if something changes, it changes. No big deal. It'll be interesting to see what's happened. We've had a bunch of consolidation here for a while, right? And so bottom line is, it is what it is.
How high we
Well, I have no idea. Like, I don't know. I don't use a lot of kind of, retracement type, Fibonacci extension charts that you do. I just have no idea. And again, if there's anything that served me well over the years, it's leaving, like, my forecast doesn't mean anything anyway. The bottom line is, if something is either rising or falling, I have no idea how high or low it can go. It doesn't matter to me. Let's manage the risk. And to put it in your terms, it can go up 50% or down 50%. I have no idea. And it doesn't matter. It doesn't matter. Bitcoin could be, huge. It could go to 1 million. I have no idea. It doesn't matter to me, right? It's 2021.
Words of wisdom. You hear him, folks? Listen to this man. I love it. He's so humble. He's absolutely right. I couldn't agree more. As usual, I agree. Okay, what about Ethereum?
Okay, so honestly, we've just talked in the office here recently. I understand there's been a bit of a breakout, but now you're starting to push me into. I don't know. I don't. It's not something I look at every day, right? So, am I aware there's been a recent breakout? Yeah, I was just told there was a recent breakout late last week, right? I don't follow it every day. I guess I got to put it in my chart package now, right? So, again, I'm warmed up to this idea when new asset classes or new sectors, for that matter, come around. Yeah, I'm wide open. How fun it is to, like, for example, just kind of off topic a little bit, see the shippers showing up at these transports. I like these guys, I have memories, fond memories, and many of the ones from the old days, I'm talking 07, 08.
Remember dry ships?
Of course, I remember that. Hilarious. These things bankrupted themselves. They borrowed so much money and they didn't need the capacity. I mean, it was funny in hindsight. We didn't work there, hopefully you didn't write it down. But the bottom line is, it's so neat and fascinating to, wow, I haven't seen that kind of stuff in so long. And it becomes a top group. It's really interesting. That's what I love about rotation. And, the market is so thick. I had an associate start, brand new with me 2.5 years ago, and came in, technology, and it's been it's been hard to sort of have him warm up to the idea that there could be something else. There's going to be other rallies that we're going to experience, and I think that is, it's the lifeblood of a market. I mean, rotation, and that's why here we are having this conversation. The rotation from maybe technology dominated, maybe some expensive valuations into value trade and resources and maybe, Canada and Australia and Brazil and emerging markets. That's exciting. Should be exciting for everyone.
What did we miss? I asked you about everything. What did we miss?
Yeah,
what's on your radar that we didn't talk about that you think is interesting? JC, we talked about everything. I mean, again, I wanted to talk about liquidity. I wanted to talk about definitely from a sectoral standpoint. Again, from an American versus Canadian standpoint, I feel like we touched on stuff. I love it. Listen, we have these conversations, and that's why I started the podcast originally, because I'm incredibly fortunate to have conversations exactly like this with people like you over drinks, at a conference, at here, whatever it is. And unfortunately, other people don't get to hear that conversation. And like, for me, it's fantastic. The people around us, everybody's having a good time. Everybody's learning, and somebody on the other side of the world, or maybe in the middle, somewhere else, doesn't have those opportunities. So that's one of the reasons I started the podcast, because we have these conversations. I was like, man, people would love to eavesdrop on this, right? So from the bottom of my heart, David, I appreciate all the insights. I think our audience is really going to appreciate it, whether they live in Canada or not. The principles are what matter. And I think you made some great points.
Well, I appreciate the invite, and it's always fun to talk markets, JC, especially with you. It's all good.
I appreciate it. All right, drinks on me next time, I promise.
All right, sounds good. Thanks.
Thanks for listening. Big shout out to David Cox for coming on the podcast. We really appreciate it. For more episodes like this, please visit allstarcharts.com/podcast. See you next time.